I always get a kick out of that check your hair notification. Everyone's hair's checked. We've got quite a number of folks tuned in. Ladies and gentlemen, thanks for joining us. I'm your host for today's panel event, The Rise of Crypto Derivatives. Frank Chaparro, Director of News at The Block, and we have a great panel lined up for you today. We'll start with Tim McCourt. He's at CME Group. We're also joined by Martin Franchi over at Trade Ninja. Thanks for joining us. Brooks Dudley of ED&F Man is having some connection issues, but he'll be joining us shortly. And he's wearing a very lovely red bright tie. I hope he's not taking it off right now. And then, of course, last but not least, at Tradestation is Peter Korotkiy. I think I nailed that one. No, not
I think you're fine.
Thank you, Peter. You're very generous. It's been an interesting time for the market. I almost wish we had this discussion on Tuesday because we'd have a little less on our plate to get through. But nevertheless, here we are. Bitcoin skyrocketed after collapsing from 42,000 to 30,000. And now we're back. I haven't checked since I left the house, but hopefully we're still in the 40s, but unclear. Since the conversation, I don't want to focus too much on price, but since today's conversation is focused on the evolution of derivatives in this market, one thing when folks think about derivatives products are the degree to which they help dampen volatility and help investors hedge. And so maybe thinking about the events of yesterday, how are derivatives playing a role in sort of, dampening volatility when we have these chaotic market events? And we can maybe start with Dudley, Mr. Dudley, since you just got in. I hope you caught the whole question, but I'm curious. Yeah.
Yeah. So I think that derivatives are obviously used to hedge. They're used to speculate. I think there'll always be volatility, although some of these extreme moves that we've seen over the last few years in Bitcoin, I think, are exacerbated by the offshore unregulated exchanges, which to me feel a little bit more like casinos than true like trading exchanges like we have here in the States. But then again, even with the established products like the VIX futures, we saw that blow up in February 2018, and then as recently as last May, we saw some pretty extreme volatility in the front month crude contract. So volatility is always going to be there. You just have to plan for it, manage it, and know the risk that you're facing.
Mm-hmm. What did the activity look like here in the States, though? I'm curious how traders were navigating the market, using products here in the U.S.
Yeah, so we did see a lot of margin calls, but nothing out of the ordinary for a move of that magnitude. We do a lot of due diligence on the credit side so that we know the type of clients that we're facing, and we're institutional only, so we don't have retail, so it's a different risk profile for us.
Mm-hmm. Peter, you see a bit more retail flowing through your site. How did maybe users of the platform use derivatives to kind of navigate these interesting waters?
All right. So all of it is pretty interesting and exciting at the same time. I think I mentioned before, Tradestation offers kind of the gamut of asset classes, including crypto, right? Spot markets. So the activity in a derivative contract, right, picks up as the volatility goes through the roof in a spot market. I think with a new contract, it's a whole lot easier to participate, right? Just because the margin and the pricing of the contract is a lot more relevant to a retail investor. Otherwise, the activity in the spot market is pretty nice to see. The adoption is pretty nice to see. I think, I'm an operational guy by sort of my roots and my sort of initial endeavors into the space. But I mean, a lot of it is coming from operational efficiency or inefficiency, right? Why is the fluctuation so exaggerated? Why there's arbitrage? It's pretty much because of inefficiencies in the market. So the more derivatives that we have, the more institutionalization we bring to the market, the more ability for a retail investor to really participate in an organized activity, the more organized flow to the market movement we will experience. So I think overall, all of the developments are positive, and I think we are really eager looking to more adoption and a whole lot more participation.
I wonder what yesterday would have looked like if we didn't have products like CME Bitcoin futures or some of these other institutional on-ramps. I want to go to Tim to talk about the evolution of derivatives in the market. But Brooks, I'm wondering what your thoughts might be on that and how the growth of derivatives might change what we saw yesterday in the future.
Yeah, I think that we'll see less extreme moves the more the U.S. regulated products grow in open interest and volume, because they just inherently have less leverage. The CME margin is close to 40%, and as opposed to 2% or 1% at the offshore exchanges. So I think in the CME, and Tim can speak to this, they have a lot of safeguards in place as far as circuit breakers. The whole T+1 margin call system is much different than getting auto liquidated on some of the offshore exchanges. So there's just an inherent buffer built in there, if you will, for the U.S. regulated products that I think I think that dampens some of the extreme moves that we've seen over the years in Bitcoin.
Yeah, Tim, can you speak to that, and then we'll get to the evolution. It seems like things were pretty smooth because of the way that CME has built this marketplace with the same type of safeguards, the margin requirements that are far higher than you would have to deal with offshore, but it's definitely safer and more similar to the things that commodity traders are used to here in the U.S.
Yeah, absolutely. I think so. There's lots of safeguards at CME Group for traders and investors accessing our markets. And I think one of the things to keep in mind is this is not something that we distinctly developed for cryptocurrency derivatives. CME is a nearly 180-year-old institution, and we actually took all of the safeguards we have in other markets and all the lessons we learned and applied them to crypto, right? So we have a lot of experience in maintaining transparent, efficient, orderly markets that benefit not only in the transfer of risk, but in the establishment of price discovery. And I think that's what we've certainly seen over the years in cryptocurrency, where we now have Bitcoin futures, both the 5 times and the micro Bitcoin, which we launched this month. We have Ether futures, we have Bitcoin options. So lots of different tools available to customers. And when we look at yesterday, I do want to just say, I think yesterday is a good example of how an efficient transfer of risk can take place in the market in an orderly and efficient and transparent manner, and that market participants turn to CME when they needed it to manage existing risk, to put on new hedges, to access the market, to deploy their trading strategies. And yesterday, our markets worked as designed, and customers take a tremendous amount of trust and confidence in doing that. So I think we've come a long way with respect to crypto, but we've been doing this type of thing for almost 2 centuries.
I think it also shows how the center of price discovery has shifted to the derivatives market, not just offshore, but potentially here in the U.S. When we think about the risks, associated with crypto. Maybe 3 years ago, it had to do more with spot exchanges being hacked and the rest. Now it's more about product leverage offshore, and it shows how big these derivative markets are. Do you think the price discovery has shifted to derivatives, and how do you expect that to evolve?
That's a great question. I actually think, without a doubt, price discovery has shifted to the derivatives market, and I think specifically to the CME market. And I don't necessarily think that's a recent shift. This is something that we've seen started happening a few years ago. And when we look at the Bitcoin equivalent and Ether equivalent volumes that are trading at CME, we're often one of the largest risk transfer platforms when you're looking at the spot market, the regulated markets, or the kind of more trusted markets. We look at the amount of volume that we're doing. So at present this year, we're doing about, let's call it 12,000 of the Bitcoin futures, which is worth 60,000 Bitcoin equivalent per day. We're doing about 31,000 on average so far this month in the micro Bitcoin. So lots of price discovery is happening. When you look at the equivalent of what our financially settled futures contract represents, that's more volume than the spot market is doing on a combined basis, right? When you look at some of our constituent exchanges, the underlying reference rates, certainly what's happening in other US markets. So I think certainly the CME futures are at the center of the price discovery process, but it's a highly interrelated marketplace. So you do have spot, you do have OTC, you both have kind of offshore, onshore options, various permutations. But I think, Frank, your point about margin and leverage is a very good one, because it's not only what we do on the safeguards of trading, but it's the way in which we margin and ensure the security and the guarantee of the contracts that trade at CME. Where CME, as a centrally cleared exchange, we become the buyer to every seller, the seller to every buyer. We guarantee the performance at final settlement of the contract, so there's no of this kind of auto de-risking and leveraging and things like that. And our approach to margin is, to Brooks's point, is about securing the system and the guarantee of the financial performance of the contracts. So I like to say, our margin is based in math, not based on a marketing need that you see out of some of these other platforms that are just trying to attract people to their platforms.
That's an interesting point. I'm having some.
I think we lost Frank.
He may have gotten disconnected. He's coming back, I think.
It's never good when you lose the moderator.
Don't worry, I'm right here. We're gonna get through.
We were ready to jump in.
So that's a really interesting point that you made, Tim, and it makes me think about where we're going to go from here. Is this just going to become the new norm? These exchanges that are offering absurd leverage for marketing purposes or whatever purposes they have, and then we'll have these cascading liquidations, and things will continue to be somewhat chaotic while CME is on an island doing its thing. Is that what the situation is going to be, or are they going to have to wake up one day and think about implementing these similar types of safeguards?
I think when we look at the safeguards, it's something that we view as an extension of our regulated framework and regulated offering at CME. At CME, we view regulation as a feature and not a bug of our offering, and it gives a lot of trust and confidence to not only the market, but what will happen over time in terms of we have a rules-based marketplace in terms of how we make contract changes, of how we introduce contracts, our rule book. All these things are transparent. So I think that we've set the standard for what it means, especially if you're an institution or you want to trade on a trusted platform. CME is certainly a standard bearer. Customers welcome it. So I think, just if not sheer from a competitive standpoint, I don't understand if those platforms want to attract institutions, how they don't evolve in a similar fashion to offer that trust and transparency that the customers are frankly demanding, that we've been offering since the get-go in 2017.
And I'd like to,
Mark, I want to kick it to you now.
Yeah,
please. I want to talk about product evolution and how you anticipate the derivatives market in the US to grow on the retail side. What other types of products? We saw E-minis come out of CME. I bet folks were clamoring for that just because of how much Bitcoin has appreciated in price. Little guys like us, little guys like me, we can't trade, we can't,
Sure.
Move around 5 Bitcoins at a pop.
Sure.
So walk us through that evolution. What future products you anticipate to see over the next 6 to 12 months?
Frank, I appreciate it. At Ninja Trader, we are almost exclusively retail focused. And to echo on what Tim said, the retail investor and the retail trader is very, very savvy. And knowing that these products are on exchange and with the safeguards and everything that CME does, and they've brought to the marketplace over the life of the institution, you're bringing a new level of confidence to the retail market, and especially then you think about product evolution, right? 5 Bitcoin, you hit it right on, Frank. Our customers were not trading those products. However, there was a significant demand for crypto futures on exchange, and what we've seen happen is all of a sudden CME, and it's across the globe really, but product innovation in futures has become accessible to the retail marketplace. And in a broader perspective, what we've seen with the rise of retail is a very real thing, right? And you think about the democratization in the equities space, there are tens of millions of people who've joined self-directed investing and trading, and product innovation on futures is bringing that audience to a brand new marketplace where they're looking for more complex and cash efficient products, and they want on exchange, and they're looking for crypto. And I think this will continue. So when we think about Ether and Bitcoin, that evolution as additional assets become more normalized, I think that evolution will continue. We also, thinking through EFTs, thinking through, size innovation as well, which is what this micro Bitcoin was. This is in its infancy, is how we're viewing it right now. And we're seeing that as the retail public reacts to this product launch and to other product launches, going back to May 2 years ago of the microization of the S&P products. The total addressable market in derivatives, in futures, has changed dramatically, and these are now accessible to an entirely new audience who's very excited about them and is using them and trading them.
What does the growth look like in terms of folks on the platform trading Bitcoin minis?
Tremendous. I mean, Bitcoin mini has only been out a couple of weeks, so I can't speak too much to it, but it's growing quickly every single day. I don't have exact numbers to share with you, but let's just say from day one to now, it's quadrupled, more than that even, and we anticipate that to go up significantly. What we're actually seeing is inbound interest to our business of folks who are thinking about these products, and they want education. And one thing Ninja Trader does very well is educate folks on products, product innovation, new things in the market, trading tools, etc. And we think that the growth here is also in its infancy because the inbound interest and people who are still getting educated on these products is just beginning.
I think a lot of folks who are tuning in are probably trying to get up to speed on some of the products that many of your firms are offering. Brooks obviously dealing with a more institutional clientele. They're probably also doing their own sort of edification and educational journey on this space. Tim, how does it sort of work when you're thinking about new products? Is it folks like Peter and Martin coming to you and saying, this is what our retail client base is looking to trade, and then you go to the drawing board and figure out if you can get that going? Is that sort of the process? And then what are folks clamoring for right now?
Yeah, so when we look at the product design process at CME Group, certainly a central tenet of what we're looking to do is design and deliver products in a response to a clearly articulated customer demand. So we certainly engage with folks like Martin and Peter and Brooks on the clearing number side to say, what are you hearing? What are you seeing? What do you need? What do your customers need? Because they are a great source of inspiration. If we are not solving clearly articulated risk management needs, whether it's hedging or accessing a market, then we're not really doing our job as the exchange. We could always, design an academically perfect product, but if no one wants it, no one's going to trade it, right? So kind of bridging that gap to the customers is really important early on in the design phase. So typically what we do is we hear an idea, we hear a problem, we beat it up a little bit internally, pressure test it, and then we do validate contract specs fairly early on from all sorts of uses, whether they're liquidity providers, retail platforms, clearing members, as well as on the margin and risk side, product features. It all kind of comes together, and it's something that we found is if you do that correctly and you do that well, it really gives you momentum around product launch. And micro Bitcoin is certainly no exception there, where when we look at the micro Bitcoin launch, this is something we validated over the first few months or last few months of 2020, first few months of 2021. And it was the third best futures contract launch in our history at CME, where, behind the micro E-mini in 2019, behind the E-mini S&P in 1997. So micro Bitcoin is certainly holding its own among some really stellar company in terms of day one product launches. And we've had over almost 3,000 accounts trade micro Bitcoin in the first 2 weeks. And that really speaks to, if you think about a conjoint analysis, just hitting that cluster of demand right square in the center. And we can only do that by talking to customers and our partners early on and making sure we're designing what people need.
What sort of products do you anticipate could maybe out of you guys or somewhere else? There's a lot of room for growth, in terms of going to other cryptos. How does that process work? Is there like a checklist, or do you just need a X amount of clients to say we want, whatever the token du jour is?
There's certainly no shortage of checklists in the exchange space. That's for sure. But when we look at this, it's really about kind of just validating the idea and making sure it's feasible. And this is where a lot of products really kind of, have their make or break moment. And I think with crypto, one of the things we are is like there's lots of needs out there. But as a regulated exchange where we are a CFTC regulated futures market or, DCM designated contract market and designated clearing organization, the tokens that we're looking to bring derivatives on must fit into that regulatory framework under which we operate. So there has to be regulatory clarity around it. Is it a commodity? Is it under the CFTC jurisdiction? Not that it's impossible for us to do things under the security, or an SEC type framework, but that's a different regulatory path forward. Most of our products at CME across all of the asset classes are CFTC regulated. And that tends to be the gating factor at present, where when we look back at around the development, the CFTC issued the Bitcoin letter in 2015 saying it was a commodity. In Ether, we have statements, but not necessarily the same letter from the CFTC and SEC that it's not a security, that is a commodity, and so significant statements. We don't quite have that for even the other kind of top 5, top 10 tokens. So I think until we get some of that, that will be something that we wrangle with as a community. Is how do we bring regulated derivatives contracts to the market? So I think certainly we're hearing things around additional options on Ether, right sizing, the Bitcoin option size. We're introducing Bitcoin, micro Bitcoin options. And then the other thing I would say is we're still doing a lot of work on the reference rate side. We do have degrees of freedom there because it's not a tradable product. So you're likely to see some more innovation on real-time indices and reference rates. But on the product side, we'll have to make sure we have a regulatory path forward to actually list the regulated futures contract in the U.S.
Understood. I want to kick things to Martin. I want to go to the institutional side of the market with you, Brooks, in a second, but just one question for Martin, and Peter can jump in as well on this one. When you look at, we kind of talked about, the market dynamics that played out yesterday, stemming from a lot of these offshore venues. We kind of touched on the product innovation happening here in the U.S. When you look at some of the products offshore, Martin, and you've been doing this for a long time, perpetual swaps, 100x leverage. Is there anything that could be adapted here or sort of bleed into the U.S. market on the retail side? How do you think about the juxtaposition of the two?
Yeah, it's a good question. So I think it comes right back to, all of the things we're talking about, product innovation. And we think about overseas and folks who are adapting to on exchange derivatives. You know, you've got there's a lot of things that happen. So there's been a trend that we've seen where FX and retail CFDs and a lot of regulatory pressure on dealers overseas is really driving an audience in a different direction. We are finding a lot of folks having a ton of interest moving into derivatives, so moving away from some of these other products overseas. And again, going back to Tim's original point on safety and all the other things that the CME and on exchange provides in the regulatory framework, those just become ever more important.
Totally. Peter, do you want to jump in on that one?
Unfortunately, I disconnected for a second. Can you repeat the question, please? Sorry.
No dramas. When you look at offshore venues and some of the products that they've put out, there's one such venue that's even done pre-IPO contracts. Is there anything there, the innovation happening there, that can maybe bleed into the US or that you find interesting or dynamic?
Right. So I think I would say that, look, the liquidity is certainly overseas, primarily because of all the things that you have just mentioned before: leverage, variety of different products, largely unregulated environment, right? So we just earlier talked about the new contract, and we kind of compare that to what has come out before, right? So our volume in the new micro contract was 60% more than the volume for the first 12 days, obviously, of that contract to the previous one. Furthermore, it's very comparable to when the E-minis came out. So it's definitely popular, but furthermore, the number of tickets is exponentially broader and larger than ever seen before. So what that means is wider adoption. Now, coming back to your question, so it's the liquidity in the broader products, right? As an example, right? So there's a lot of arbitrage out there, cash and carry arbitrage. What does that mean, right? So if you have a future trading at a premium to spot, you short the future, you long the spot, right? Where do you find liquidity? Prior to the micro contract coming out, it's kind of hard to operate with a larger contract for a retail person that just wants to do onesies and twosies, right? Here, now you can come to Tradestation, you can open an account. That account will be opened systemically in equities, options, and crypto. You can come in, you can certainly short the future using the existing leverage mechanism, right? And go long the spot, right? We don't offer leverage on spot because it's not allowed in this country. And by the way, rightfully so. A regulator hasn't addressed it, but at the very least, that type of a mechanism is now allowed with Tradestation, right? So we have this gaps of things that we can address in this country and bring the volume here, right? You have completely separate exchanges putting up some wild, largely unregulated market data streams. There's no aggregated liquidity, right? All of it can be brought in, institutionalized here. And that volume can come here, but we have to offer the product, right? What that means is that we need to offer some sort of a centralized aggregated market data feed, sort of similar to what Tradestation is doing, like getting all of those market data things and presenting it to a customer so it's easy, right? So you can come in, fund your account, and trade on, for a spot contract. And now we have a futures contract on CME that can be paired up, whether you are hedging, whether you're doing cash and carry, whether you can do a variety of other things. Efficiency, variety, and ease of use is what really we need to bring to this country.
Makes a lot of sense. I want to flip over to the institutional side of the market with Brooks. One thing that I've been hearing, especially out of the indexing space, there's a lot of different folks out there in the market that are trying to be this, the standard bearer of crypto indices. And many are looking to service banks that are building various types of OTC derivatives, leveraging these indices. What sort of products are you seeing some of the banks dabble with? We've heard of, Goldman has come out and said that they're doing non-deliverable forwards. What does the landscape look like on that side? What are the banks looking to do? Maybe some of your clients.
Yes, I think that's a great question. I think it's still early. We actually worked on a project 3 years ago for a non-deliverable forward that would go through our swap dealer, but I think we were kind of early on that. You see, as you said, Goldman dabbling with it. Based on what I read, it sounded like they hedge the risk with CME futures. So that's interesting. I think we'll see more banks start to dabble in that. And to the OTC, question in general, there's already an OTC market out there for Bitcoin options. We don't participate in it yet, but it's something that we've been following, and I think that space will develop similar to how we've seen the FX space, OTC space develop over the years. I think it's still early days. Did want to mention, Tim mentioned the potential for eventually having options on the new micro contract. I think, for us, our volume of the micro contract, we knew it was going to be.
You knew it was going to be. You there, Brooks?
Can you hear me?
Yeah.
Yeah. Okay. Sorry, it's telling me that it's trying to reconnect. But we knew our micro volumes would be smaller than the big contract volumes just by the nature of our client base. But that's great. I think it helps us. It helps my clients if more retail gets involved. And
I think we lost Brooks. Tim, do you want to jump in with maybe how some institutional players are leveraging CME's various products? What type
Absolutely.
of OTC type products are they looking to build out, and how is that market shaping up?
Yeah, so I think one thing, right? So while I do run crypto at CME, my other part of my day job is equity indices at CME, and I bring a lot of that kind of perspective to the crypto market. Where at CME we are very supportive of the interrelated market developing between OTC and listed futures contracts, between spot, ETFs, maybe in the US one day, but in some of the other jurisdictions in Canada, Brazil, et cetera. These are all highly interrelated parts of the ecosystem, and any growth in the other areas is certainly great growth for futures. And when we look at the institutional adoption, whether they're using the regulated futures contract at CME, which we think is perhaps one of the easiest on-ramps, or underlying spot or digital markets, then they start to hedge with futures. So these things go hand in glove in a lot of respects. But specifically to the use cases around the products at CME, futures are the older sibling, as we now like to say, the OG, the original BTC contract at 5x is a large contract, certainly catering to institutions, institutional use cases. The new micro is still being used by institutions because even they need the smaller, right-size, precise contract. If you think about hedging option delta, if you're trading options at CME or on some of the other platforms like Deribit or even OTC, everyone can benefit from now trading in $5,000 increments versus $300,000 or $250,000 increments. It just increases precision. If you can allocate amongst various accounts, if you're an institution, you could use it in an omnibus structure, or if you're an asset manager, you could allocate. You could monetize your inflows and outflows just much more easily with all these contracts. And then what we're seeing on the options front, and I think why some folks are so interested in something like micro-sized options is they're using options in crypto in the same way they are in other traditional asset classes for creating kind of synthetic loans, right? It's like kind of like stock lending or synthetic borrow or monetizing or being able to create some of these yield carrying strategies that we were talking about. These are all things that help facilitate the rest of the market. If someone needs to borrow the digital asset, they can now use regulated option structures to be able to go out and obtain the Bitcoin and on lend it and create. I think the yield, right, is on an annualized basis like 20% at present in Bitcoin. That's why you're seeing contango in the futures market, and people are looking at ways to deploy this yield. So you're seeing all these use cases by institutions that are being traditionally deployed in things like equity or other asset classes. Some of the physical commodities. So it's really been exciting to watch that transference of strategy and approach to crypto. And there's lots of ways to do it. And I think we're still early days, though, because as people move into some of the other aspects of the ecosystem, I think futures will be kind of in the center. And you'll see a lot of products like the Goldman NDF, which is great. It's a great win for us at the exchange to have them using not only our futures contract, but base it on the Bitcoin reference rate, the CME Bitcoin reference rate. So I think we're early days, and we encourage lots of innovation and welcome people in other parts of the ecosystem, to bring products to market, because it's going to be a great growth versus growth story for all.
Yeah, and there's just, you hit on a lot of the different opportunities that exist for traders. The basis trade is one that, has even surprised me how long it's persisted.
Yeah.
Brooke is back with us. Can you speak to some of those other opportunities? Yield is obviously huge across markets. There's been a hunt for yield in Bitcoin market, especially in derivatives, has the cup overflowing. Can you speak to some of those opportunities?
Sure. I think, one thing that we get asked about on a daily basis, and it came up in the chat, and I saw that, Tim responded, is, when will clients be able to put up Bitcoin as collateral? There's a lot of crossover with clients that trade CME, but also trade these offshore derivatives exchanges. And the offshore exchanges, they're used to posting Bitcoin as collateral. So if they're trading a basis, a future offshore, they're posting Bitcoin, they're going short the future. So they're always looking to do that with the CME product. I think there's some innovative ways that we've looked at being able to facilitate that, possibly with, a tri-party type setup with a custodian, where, we lend for some of the margin, or we have a sister entity that lends to post some of the margin at the CME clearinghouse. So there's lots of opportunities for, further development of new products and structures around even just the CME futures contracts.
One thing that we spoke about in preparation for this call was how there's not necessarily a lot of different venues that have seen the success of what CME has been able to do over the past few years. What does that mean for the market, and what's sort of behind that? We see a lot of folks buying to get products off the ground. Is it simply sort of distribution network or something else?
Yeah, so distribution is definitely key. The CME has an incredible distribution network of FCM partners, and they launched, I think, with maybe 4 or 5, but they've been able to get up to over 20, and I think that's really key. And it's distribution to a lot of different types of FCMs. FCMs like ED&F Man, NinjaTrader, Tradestation. I think that really helps. I also think that they took their time, they did their homework with constructing the right index. There was another product that launched around the same time as the CME, and it was based on only one spot exchange. And I think that made it tough for that product because, traders were a little wary of what could happen at settlement if the settlement price is only based on one exchange. So I think the CME has a robust settlement mechanism, and that's really given a lot of traders and institutions confidence in trading that product.
What's your opinion, Martin?
Yeah, I would echo what Brooke said and add a bit to that. Yeah, the distribution network is extremely vast, the CME, and that's incredibly important. You need, to Tim's point earlier, with product innovation, you can get a lot of really, you can get extremely analytical and put a product out that people don't want. And if there's not a lot of activity from the retail perspective, if there's not liquidity in the product, there'll be nobody trading it, right? The CME has the distribution network through its FCMs, et cetera, to bring product innovation and bring an audience, and that's a really difficult thing to replicate. And then when you think about the tools and the safety, et cetera, it's a very tall barrier to climb. At the end of the day, like I mentioned previously, the audience is growing so fast, and retail traders are becoming more and more educated, and they're paying far more attention than they have historically. And the way we're looking at this is when you think about market data, exchange costs, and then rising retail demand and product innovation, that the convergence of all of those things is occurring right now. And the CME's done a great job of satisfying that mix. And it would take significant effort by someone else to come in and, there's tens of millions of customers thinking about these products, right? It's going to take distribution network and the convergence of all of those things to satisfy the mix and demand out there.
Makes a lot of sense. Peter, what would your advice be to someone looking to usurp Tim and give the exchange a run for their money? What can we do better?
So I think simplicity and what makes sense, right, is the key to success, right? So, the contract has to, people need to understand what that looks like, right? So when you try to experiment with a contract that delivers physical, it's kind of becomes a bit more difficult. It's a lot more difficult to implement and to install when you have different clearing houses that are trying to clear that contract outside of your traditional sort of places that are currently in place. It becomes very difficult to implement just cost-wise as a project, right? Because a retail broker-dealer and a futures commission merchant like Tradestation will have to pipe the market data feed, find a clearing platform, whether it's GMI or Wedbush or what have you, right? So all of that becomes a project and a half. When you go off the reservation and you develop something that's completely new and you have to develop these things that are not commonplace, it's just costly. And then you start really looking at what's my cost to benefit, right? What can I bring to my investor that's going to be, to my customer that's going to be faster and it's going to be interesting to them, right? So when you go with obviously things that are less costly and more interesting, and by the way, make sense and simple. So I would say, while the rest of the country is in pandemic, right? CME comes out with a good contract, so kudos, right? You have to say thank you and move on.
I want to go back to what we sort of touched on at the beginning of the conversation yesterday, wild price fluctuations and volatility. How does that impact adoption on both the retail side and institutional side? One thing that's driven the narrative for the latter is this idea that Bitcoin's a store of value. When you're going up and down 10,000 in a day, that's a pretty strange store of value. Do you think days like yesterday impact that narrative? We can maybe go to Tim and then Brooks, and then we'll get the retail perspective.
Yeah, I think it's a good question. I think notwithstanding some of the recent...
You're on mute.
Oh, can you guys hear me?
I can hear you.
Okay. So I think notwithstanding some of the recent price movements, I think there was some momentum, right, that it was shifting more towards store of value with respect to Bitcoin. I think that the scarcity, right, element of Bitcoin certainly bodes well for that line of thinking over the long run, but it's still fundamentally early in the grand scheme of things. And we're seeing from our perspective at the exchange, it's really a function of supply and demand seems to be the more driving force right now, which is why it's even more important that you have centralized price discovery, an efficient mechanism by which people can manage that risk, transfer that risk, access the liquidity. Because Frank, to your point, even if it is a store of value, there is still volatility in the asset itself that underpins why people are either buying or selling. One of the things that I always like to point out, which is obvious, but I think when you think about the exchange and what we perform, is like we're agnostic to the actual price directionality of the assets. We just want the buyers and sellers to be able to meet efficiently in a trusted manner. And even though when the market is moving up or when the market is moving down, someone still thought it was a good idea at that exact time to buy or sell at that exact price. So there's fundamental disagreement on every single trade about the directionality of the asset, and Bitcoin's no exception. I just think what I would encourage people to do as you are investing, certainly do your homework. CME is a great way to get involved. And if you're involved in other parts, you have digital assets or you have other exposure to Bitcoin, and I think this is what we're seeing from corporates and asset managers who are now allocating or taking payments is, there's still a fundamental need to hedge your risk, no matter how large or small you believe that risk to be. And that's where futures and options on futures are a great way to not only access, but to hedge. So if you were hedged, you could have necessarily been a little bit more immune to some of the price movements we're seeing. Or if you're a trading firm or deploying systematic strategies, it could have been a great opportunity to deploy or increase your strategy. So I think it's just a matter of making sure that as the store of value versus medium of exchange debate continues for some time, there's going to be some pendulum action, as to which one's reigning supreme at any given moment. But I don't think price direction or price movement on any one trading session necessarily cements or erodes the more fundamental thesis around Bitcoin scarcity.
What say you, Brooks?
Yeah, I think Tim touched on something important there, and that's that for the CME and for ED&F Man, we're not selling investors on, hey, you should go long Bitcoin. We're offering, access and clearing to derivatives that you can use to hedge. You can use to speculate and go long. And, sometimes our book of customers are net short Bitcoin. So the price action, like for us, more price action is good. And, as Tim said, and you mentioned, Frank, the narrative around store of value, that narrative has been there for a few years. And, that narrative didn't go away last, March 12th, 2020, when we had a very similar move to what we saw yesterday. So I think, there's always going to be volatility when an asset is going from, market capitalization of a few hundred million to, I think we were over $1 trillion a few weeks ago for Bitcoin spot. So, there'll continue to be drawdowns.
What is it on the retail side? I imagine folks are eating it up, right? Price swings are what they long for. Yesterday Bitcoin made the Tesla options or meme stock options child's play. How do you when you have that type of volatility? How does retail respond, Martin, on your platform, and how do you sort of make sure that the uptime stays stable? So
Sure.
Yeah.
Sure. So a couple quick things. First, we talked about adoption, and yesterday, if you think about when we have wealth advisors and people starting to introduce crypto into portfolios, and then there's a ton of people who I would, in my personal life, would never think would be thinking about cryptos, were suddenly thinking about cryptos just this year, right? And just thinking about Bitcoin as everything rose. This is the first time anyone saw a real correction. I mean, people who saw previous corrections, right? This may not be a significant shock to them, but there's a ton of people who watched these assets climb up in value extremely quickly And I believe that a lot of people thought, when Tim talks about there's buyers and sellers at every side of this thing, a lot of the people who were buying really felt smart, and the values continued to climb. This is the first time you've seen a real correction. So I think when retail thinks about a correction like that, I think there's obviously profit taking and there's things like that going on, but I also think there's the first time where this new audience is going to have a bit of mistrust for the asset. And I think you're going to lose some folks. We're going to go, wow, this, I didn't expect that, right? And in many cases, I don't think people went entirely upside down on these things, right? So that's kind of first. I think that was a first for many. And then for our customers, I said, in terms of accessibility and the micro product that came out 2 weeks ago, is the first time our customers have had the ability to short. And they did, and people were able to, win on both sides of this. And that was the first time, and from the retail perspective and on exchange futures for us that we experienced that.
That's interesting. Peter, what was the experience for you guys?
So for us, we offer spot, right? And we offer the future, right? So it's pretty incredible from a standpoint of the volatility presents opportunity, right? From a retail investor standpoint, right? Accessibility, ease of use, education, like really important, right? So now you have the fluctuation of crypto and the ability to hedge with a smaller contract on CME. It's still not as efficient as a lot of people want, right? We need more products. We need Ethereum to go that way. There's a variety of other things, Bitcoin, Cash, whatever. But I think that people are craving for trade ideas, education, volatility, we have a lot of traders that participate. We had a great day. The platform stayed up. I think that's really important. There's in the chat, there was some questions about education and, like first adopters of crypto. We specifically not too long ago purchased an entity, You Can Trade, and that has a lot of materials and education, not just about regular markets and CME products. They partner with CME a lot, not only about futures, but also about crypto. They hire coaches, they teach people. I'm saying this type of events produce a lot of opportunity for many of us, not just from a profit standpoint, but to improve our systems, to provide better linkage to the customers, to give them improved products, education, and many other services. So I think it's great, just great evolution, and it's really great to see.
I'm sure there are a number of folks who are listening that are new to this market or new to crypto or crypto derivatives, maybe everything. I've seen a few questions just asking about, to your point, resources and educational resources. Let's maybe, it's not financial advice. I'm not going to give financial advice, but what type of advice would you give maybe some of the folks who are getting into this market for the first time, in terms of the do's and the don'ts of engaging with these crypto futures and options markets? Maybe we'll go to Martin first.
Sure. I'll keep it very brief because I think there's one thing that's very important, and at NinjaTrader we stress is customer education. Similar to Peter, we have an ecosystem, the NinjaTrader ecosystem, that is just rich with educational content, and we want people to get educated. So if there's one piece of advice, I would say do your homework, get educated on what you're planning on doing, understand the underlying assets, understand the mechanics of the derivatives and the options, think about your strategy, think about the costs associated to it. Just do your homework, be educated when you enter these markets.
Peter?
You hit it spot on, right? You have to be very careful, right? Where, especially on the spot, in a spot market, right? So in a spot crypto market, you got to be careful where you go with your money, right? Because you need to have a trusted brand. You need to make sure your stuff is stored on a platform that offers some form of reasonable understanding of where that crypto is located at. Similar on a future side, you got to make sure that the tools and education are up to your standards, that the firm you are dealing with is transparent and sets expectations on their policy. So when you come in, you're not surprised at what happens, right? So very important. And again, education is critical.
Understood. We've got 2 minutes left. This was really great. I'm very excited about the turnout. Look at how many people turned out for you guys. It should make you feel great. Any closing thoughts on the market? We'll go to Tim, and then Brooks can have the final word.
Yeah, I would say, I think it's a great time to really just get involved, educate yourself. In terms of education, go to cmegroup.com. We actually have an upcoming micro Bitcoin trading challenge, which is a great way to practice. You can find out more on our activetrader.cmegroup.com. And I think my closing thought would be just my anecdotal observation, perhaps. If the number of ties on this call today is a sign that crypto is going mainstream, then it's certainly great for institutions. I think this is the most ties I've seen in a long time. So I think that's my closing thought for today.
Well, I haven't worn one in ages. So I'm moving out of my apartment, and I got back into my closet for the first time in like half a year. It's my flower tie.
I like it.
Brooks, kicking it to you.
Yeah, Tim, I was actually thinking about donating all my ties if I didn't start back wearing them soon. But yeah, look, I think it's early days for Bitcoin, and it's extremely early days for regulated derivatives on Bitcoin. As I said before, I think there's a lot more things that will be built around the CME futures. At one time when I got cut off, I was saying that I'm really excited about when they launch options on the micros, because when they launch options on the big contract, I think the price was $9,000 or $10,000 per Bitcoin, so $50,000, and obviously that ballooned to over $300,000 a contract. And I think that made it, even for the larger market making firms, I think that made it tough to really quote and provide the liquidity for the CME options on the big contract, because you have X amount of strikes times X amount of expirations, and you really have to have a risk model calibrated for what could happen if you get hit on all of those, that you're quoting both sides of. So, really excited to see further development and more new products from the CME.
And we shall see. Maybe, next time the market tanks, we'll have you all back here, and we can, that can be our respite. Gentlemen, thanks so much.
Thank you, Frank. And thanks, everybody.
Thank you.
Yep. Thanks, Ryan.
Bye-bye.
Thanks.
You all.